Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on commodities, we're going to start on the weekly time frames and zoom in from there for the dollar, gold, miners, oil, and natural gas. So starting it off with the dollar, the weekly time frame, we had that little bit of a rounded top. We ended up pulling back fairly significantly at this point, but look at the 3 of the 4 weeks of this pullback. I see lower wicks, so that tells me that there are bulls buying some of this dip. And what I'm going to be looking at for a broader term perspective is that if we're going to see significant weakness in the dollar in 2019, it's likely going to be in a head and shoulders pattern. So the most important support level for me is down here at 93.81. So we're going to mark that level, and we're going to look for the bulls to hold that level on this pullback. If they form a higher low compared to 93.81, which is more likely than not, just because of how much space we have to work with still, but if that level were to hold on the weekly and then we see a bounce, that would be the setup for the possibility of a head and shoulders pattern. With the left shoulder, this would be the head. If we form the higher low compared to 93.81 and bounce, if we set the lower high compared to the recent high of 97.71, and if we cannot break that level, and then we pull back and lose that new support level, which is the right neckline of this pattern, that's a possibility for a more significant pullback. So that's something that I'm going to be watching for the first quarter and probably second quarter of 2019 if that were to play out. Another scenario would be the bulls see a higher low and then continuation of this uptrend into a lot of strength. At this point, the amount of the pullback is significant enough that I feel like the best case scenario for the bulls would be an equilibrium pattern on the weekly time frame. The daily chart has a weak bounce attempt. Anything under 96.96 is just a lower high on the daily. So we're not close to changing any kind of trends on the daily nor weekly time frame. The bears have the upper hand as long as the daily chart continues with lower highs and lower lows, and the short-term support right now is 95.03. So still just going to be watching this daily downtrend, but also aware of that weekly pattern and how that could play out with a bounce sometime in the next couple of weeks. Gold has been holding up really well. The weekly time frame formed an inside bar showing us a tightening range. The last weekly higher low that we have is down at 12.11. So if we do consolidate on the weekly, anything above 12.11 keeps the bulls in full control. So we're not going to lose this weekly uptrend anytime soon that the bulls are currently enjoying. So we zoom in for more details. The daily chart shows us just sideways trading at this point. We've got our base of support at 1276 and 1298 is our top here. And the daily time frame has seen 7 trading days in a row within this range. So this is the most important range that's going to indicate whether weekly consolidation is coming or whether the bulls can see continuation over 1300 psychological resistance. So that's going to be a clear break to be watching for this coming week. And the gold miners are obviously going to respond to that. So the miners have been slowing down a little bit over the last month. You can see the high of the last 4 weeks, essentially the same. And again, we compare it to gold, and gold is seeing a significantly stronger previous 4 weeks with these continuation candlesticks. So it's a little bit of a different setup, but the bulls are still holding on at this point. And you can see how tight this range is getting. The bulls are in control with higher lows, but if we lose this daily higher low pattern, we're going to be looking for the bear miners to get a little bit of upside. So ideal scenario for the bear miners is to see these miners lose their daily uptrend with GDX breaking 2069 and then see gold break 2076 on the daily to see further pullback. So that's a scenario to be watching for, and to negate this potential weakness, the bulls just need to see a break of 2141 and then 2154 to try and keep this move going. Junior miners also getting some follow through. It looks closer to gold. It was a laggard compared to the senior miners, and then last week they caught up a little bit, but it's a tightening range as well. The key support is 30.24 and the key resistance is 31.59, which is a double top. So a very clear sideways channel on both the miners and on gold to be watching. And again, those bear miners are patiently waiting for a short-term bounce opportunity if these daily higher lows are lost on the bulls and if gold loses 1276 support. Checking in on oil. So oil on the weekly time frame, I'm watching the possibility if we pull back on the daily chart more significantly, 54.54. Anything under that is a weekly lower high and just a weekly lower high. But if we're going to change this weekly trend, in my opinion, it's an inverse head and shoulders pattern. With the left shoulder, this is the head. If we cannot break 54.54 and have to pull back for some healthy consolidation, and then we break these two resistance levels, that's a very notable trend change. And in my opinion, that is going to be a very significant bullish development for the market as a whole if that takes place. So if we see a little weekly higher low and then a bull break of those levels and we enter this resistance, or I should say the lack of resistance zone here, after 54.54, you can see we didn't establish any clear resistances on the drop from 70s. So if we get that trend change, that's going to make for a very healthy bullish market environment in Q1 2019, in my opinion. So that is the most important factor for me going forward. And on the daily time frame, we started to consolidate with our top being set on Friday and a bit of a more convincing pullback. But even then, we still held support. We had the low of 51.14, we held it at 51.17, and we're looking at a couple lower highs on the hourly time frame, 52.33, and then down to, gotta make my magnet on so I get my exact levels. So 52.33 resistance, 51.82 is resistance. I played UWT as an oversold bounce play first thing Friday morning. The 15-minute RSI down in the teens is the reason I was looking for that entry. And then I zoomed into the 2-minute time frame to time that entry a little bit more significantly and got that big dump candlestick volume climax. A lot of oversold short-term time frames, entered UWT, and then sold when the 5-minute uptrend was lost because we were just anticipating an hourly lower high. So here's the scenario where if we look at this hourly time frame and we see an all-out dump and we're very overextended on the short-term time frames, and if we make an entry, we know that on the bounce we're likely to just form a lower high, which is why I was quicker to take profit than if we were in a bullish uptrend. To see that kind of a pullback, we know an hourly lower high is going to form. So as soon as we lose the 5-minute uptrend, that's the first indication that the hourly lower high has been set, and that was my exit signal. So again, oil, key important support short term is 51.14. If we break that Monday, Sunday night or Monday, then we know further daily consolidation is coming. The daily chart will form a higher low on oil because the last support was 44.31. So we're not going to be convinced that the weekly lower high has been set on oil unless we lose this daily uptrend or just see a slow pullback all this coming week. So I'm bullish oil at this point. If we start to see significantly, well, let's say I'm bullish longer term oil. I do believe the bulls have a very good shot at changing this weekly trend. And the reason for that is the size of the bounce that we've seen to this point. We've seen over a 20% bounce, which is significant for space that the bulls have to work with now to form that higher low. So unless on the daily chart we start to see some high bear volume and some big swift pullbacks, we're going to be looking for a higher low to be established, perhaps in the $48 range, and then we'll see if the bulls can get that continuation move and change that weekly trend, which again would be a very significant factor in whether or not the market bulls are going to be able to change their weekly trend and be looking back at recovery in 2019 from the end of 2018 dump that we saw. Natural gas, still holding that position, looking for the oversold bounce and ending the week on a very positive note. It's a weekly inside bar, and if we break this inside bar bullish this coming week, we're going to be looking for this bounce to take place. So the reason for entering the trade was how extended the weekly chart was. My conservative target, even if it's a weekly bear flag, we're looking to get to 340. If it's a solid bounce and the bulls get significant follow through, we're going to be looking up to 380 or so. So we still need follow through. The bulls still have proving to do, but I'm holding on to my position. I was planning on adding if we did see another leg down before any kind of bounce took place. But now that this bounce is starting to take place, I am shifting my game plan. I have my position. I'm not going to sell it until we see either significant red flags or targets are hit up here. But I'm also not going to be looking to add to this position at this point. It's a solid enough position that I'm comfortable with it, and it was just me reserving cash for if the move got extra extended on this weekly time frame. So again, the reason that we were looking for an oil bounce, if you go back and watch videos from 4 weeks ago, we were scouting this bounce on oil. It's the same scenario, just a complete significant pullback, with a lack of bounces. This one bounce, we played that little bounce attempt. It ended up with a 10% bounce. It ended up being a bear flag, so we had to be cautious. But even on this leg down, we know that the weekly chart is so extended that a weekly bounce is due. And that's the same thinking and mindset here for natural gas. The huge bull move, the very significant pullback, and we know a bounce for a lower high is going to be coming. So a lot of people look at the fundamentals. There's nothing wrong with that. Personally, I don't. I'm not looking at the weather reports. I'm not looking at the inventory reports. I just know that technically speaking, the likely scenario is a weekly bounce from these levels. So on the daily chart, the weekly or the daily bear flag was intact here. The bulls are trying to negate that with a very solid candlestick to wrap up the week on Friday, and we broke key resistance. So as we knew, 3076 was a key double top. We broke that. The inventory report had a bearish reaction, so we pulled back under it, and then we got that follow-through break, and we also broke resistance of 1372. Look at the lack of resistance on the daily time frame now between 1372, which has broken just barely, but after that level, we're looking up at 360 as the next daily resistance. So this is where the bulls have a lot of space to work with, and hopefully we can see some follow through. Sunday night, 2 weeks in a row, we've seen natural gas dump. This is a much different end of the week. This is a much different scenario with the lack of resistance in this range here. Let's see if the bulls can start the week off with a continuation move Sunday night and be looking for some follow through. Keep in mind, 4-hour RSI getting extended. So if we do start strong Sunday night, Monday morning, we will be looking for a healthy 4-hour higher low to form. Bull cross of these 12 and 26 period moving averages. They had the bear cross at 460s, and now we got the bull cross for the first time. That's a significant shift as well. So again, just riding this position out at this point, I would like to get in a clear daily uptrend, and then I would just use that daily uptrend as my stop levels. Every time we set a daily higher low, I would move my stop up because I know that when we lose the daily higher low pattern, the weekly lower high has likely been set. So at this point, we're still going to be cautious for the potential of a weekly bear flag. If this coming week, the bulls get solid follow through over 340, that will negate the possibility of a bear flag. And that's what we're hoping the bulls can put together. At this point, from this entry, I might move my stop up to break even, because if we were to drop back down to where my break even is on UNG, which is what I'm playing, I don't want to deal with any time decay. And I also didn't want as high risk, high reward to play as the leverage ETFs give us, because again, I was entering into weakness, but waiting patiently for a clear support level to move my stop level up to. And the next time we form a 4-hour higher low, that may be the level that I move it up to. So overall, nice end of the week. We'll see if we get the follow through. Oil starting its daily healthy consolidation. We're looking for a daily higher low to be established. We're watching the weekly, longer term pattern. And as far as gold goes, still holding on sideways channel for the miners and for gold itself. And the dollar, clear daily downtrend to be watching this bounce. We're just looking for a daily lower high to form. Hope you have a good weekend. We'll see you soon. Let's get some natural gas follow through. I'm going to share with you all my trading trinket good luck charms that I keep on my trading desk and travel around with me. The first is an elephant from one of our members. I believe he sent that from Thailand. Second is your standard moose when you need the bulls to show up. Then I got Bert. Gave that to my grandfather 20 years ago. And the real winner, this is a gold-plated horseshoe that my grandfather got. He was in the Battle of the Bulge, but this is from a French farmer who let them stay in his barn overnight. And he put gold plating on it and then gave it to him on his way out. So that's what I use for good luck. And I highly suggest that you all have little trinkets for your own. Can't hurt.